Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
This is Brian Boland, and I am the Aggressive Growth Stock Strategist here. And my top stock pick for the week is Zscaler, and the ticker is ZS. It's a Zacks rank number 2, and that gives it a buy. And the style scores look like what we would see on my aggressive growth videos here. We got an A for growth and an F for value. And I like to see that divergence in the style scores because it tells me right away that I am looking at a stock that growth investors prefer over value investors when I see that strong growth signal and that weak value signal. But let's go ahead and take a look at why this is a Zacks rank number 2 and the things that I like about it. We see a good history of beating the number. Massive beat, massive beat, massive beat, massive beat. And, that's a 312% average over the last 4 quarters. And here we can see estimates actually moving up, for this quarter from 1 cent to 3 cents, moving down for next quarter, but it's just a 1 penny move. So that's okay. But here, if we look at the full year, the fiscal year, I think that's what's really important here, 15 cents to 21 cents. And that's what we love to see. Next year, 22 cents to 27 cents. The Zacks rank cares much more about the full year than it does just the quarterly moves. But we can see that there's a good history of beating the number. Estimates are moving up. And now if we look at the valuation, this is where things get just a little bit fuzzy. 600 times forward earnings estimates is a lot. 48 times book is a lot. 41 times price to sale is a lot, especially when your operating margins are, kind of neg. And we got net margins here being neg, but we do have 40% top line growth. So, we got to put everything into context here. You're paying up for this growth at a time when earnings estimates are moving higher. A lot of stocks aren't seeing that. And here's the thing. We've seen this stock go, absolutely parabolic. And, when you're in the stock, it's great to see that. The question is, when does it stop? And to me, it doesn't stop until the growth stops. I think that's when the value people have to, grab onto this idea. It's like, oh, it's just too much of a valuation. But that's not what we're hearing from the analysts that cover this stock. I think we've seen last week RBC Capital Markets initiated with an outperform and a $130 price target. And as we can see here, it's $124 when this video is being recorded here, and that's on Monday, July 13th. And then as well as that, we also had Citigroup. They upgraded the stock from neutral to buy, and they put a $152 price target on the stock. So the analysts are still loving this stock. They've been beating the number. Things have been looking better for it. And that's why I have selected this name, Zscaler, as my top stock pick of the week. And now here is Tracy Reineck.
So it's not just tech stocks that are hot. Canadian solar in the solar area is also really crushing it right now. You don't hear much about solar, but it's managing to do quite well during the COVID crisis because you either need solar panels or you don't. And construction has remained ongoing throughout the globe pretty much during this crisis. So the solar companies' earnings are looking pretty good. And it's one of the few areas where you can actually find some cheap stocks with growth. So how cheap is it? Canadian Solar is trading at just 8 times its forward earnings. And let's take a look at what those earnings are doing, because those are starting to see an increase here, which not many companies are able to do during this crisis time. So let's take a look. So take a look at these estimates here. For 2020, you can see they're on the increase. They're looking for $2.69. Now, they only made $2.19 a year ago. So that's earnings growth of 22%. And they're expected to see double digits again next year, with the analysts pretty optimistic here at $3 for next year. That's earnings growth of 11.4%. And as I said, these shares are trading cheaply at just 8 times. But let's take a look at what the chart is doing, because That's an interesting thing here too. So shares are well off their coronavirus sell-off lows. It's been a choppy journey here, as you can see, and now they're right at those 2-year highs. Can they bust out here and finally take out this narrow trading range? Some people say yes, because they're having pricing power going here into the second half of this calendar year, and margins are expanding. They have great cash flows, and they also have a lot of cash on hand to survive any of these challenges with COVID. They had 1.2 billion at the end of the fourth quarter, which was in March. So a lot is going on good here with the solar companies. Canadian Solar, CSIQ is one of my favorites in this area. If you want more Zacks number one strong buys and number two buy stocks, be sure to go over to Zacks.com, and you can try out all of our newsletters and get the list of the Zacks number ones if you go over to Zacks.com/promo. Sign up over there on Zacks.com/promo to get everything, but be sure to read us on Zacks.com and get those Zacks number one ranked stocks. We'll be back again next week with some more number ones.